So let's start by bringing Bruce on the show. Bruce, welcome to the show.
Welcome. Thank you. Yeah.
All right, Bruce. You got a great, illustrious career here. I noticed that you work with Jim Cramer from TheStreet.com. Give us some background on you, and then I would love to hear what's going on at RealMoney.com.
Well, I've been in the business since early to mid 70s. Initially in the commodities market, which can lead into our conversation about Bitcoin.
Right.
Traded commodities, stocks, bonds, treasuries, everything except currencies over the past 40-some years. And taken that experience and shared it with students on the college level for the past 22 years, both at Rutgers University and at Baruch College here in New York City.
And you also author of a book, How Technical Analysis Works and Chart Patterns, right?
Right, two books. One came out in 2003 with Prentice Hall, and the second one, Chart Patterns, really had a just delving into bar chart patterns, the head and shoulders and all the funny names that are out there. Mm-hmm. That came out through Bloomberg Press a couple of years ago.
Right. I'm a technician from way back, been studying technical analysis since 1980. So on that point, we have a lot to talk about. But I want to know what you think about this tech rally in the United States.
Well, certainly for real. A lot of these companies have, if you like the CAN-SLIM method of analysis, have a year-over-year, quarter-over-quarter impressive earnings growth. That's where the growth is, mm-hmm. and the stocks have performed. I have no problem with the tech rally, and that's where the outperformance has been in terms of the stock market. The only thing that bothers me going forward is that investors have, in chasing this outperformance, the list of stocks that are contributing to the gains in the market averages is really about 15 stocks or so. So I get a little nervous when you see concentrated positions, like to meet or beat the averages, you have to be in these 15 names, and, whether it's Apple or Broadcom or whatever. And if you're not in them, you're not outperforming or even, meeting the benchmarks. And it becomes, at some point, it starts to remind me of the Nifty 50 back in the 60s and 70s. You had to be in those names. And that didn't end well. Not saying that this particular tech rally is not going to end well, but it just it can exaggerate moves on the downside just as they're being exaggerated on the upside.
Is that what you see as the next stage coming up?
Well, it's a possibility. If when everybody does the same thing, nobody is thinking anymore. If everybody's doing passive investing and no longer doing any market timing in the VIXs, which probably contributes to why the VIX is so low because of what was passive investing, then when there is a downturn, they're just going to go with it to a point where then they wish they had made a decision to market time a little bit.
What do you think about Bitcoin?
Well, the futures are supposed to roll out on December the 11th. And I saw an interesting statistic about it today that its market cap was something like $135 billion. And that was worth more than McDonald's, the corporation, which has, something short of 380,000 employees and has about 25 billion in sales. I mean, that's a real, entity. But this is, they call it a cryptocurrency. I mean, we've had alternate currencies for a long time. Some, two of which I use a lot, airline points and hotel points from credit cards. I mean, they're essentially alternate currencies. But this one really has no intrinsic value. The futures market that's supposed to happen, I'm not sure it's going to be successful. As an old-time, futures guy, I remember that a successful futures contract should have a large number of producers and a large number of consumers, and it should have risk, and that people need to transfer this risk. I'm not sure those qualities are all there.
Well, one of the
But
things that always comes to my mind is anytime something becomes so popular that you now release it to the public, all of the real money's already been made, and it's almost prime for a shorting opportunity versus buying it for the next stage up. And then when you add on top of that, these governments are now talking about backing their own cryptocurrency with their own Federal Reserves, which kind of, makes you wonder if that's really going to end up as having legs, or it's going to take a little while to smooth all of this gyration out, and in the beginning get a big pullback to a point where a real market is created again. What are your thoughts on that?
Well, governments will get involved, whether it's good or bad, at the point where when they're trying to implement and change monetary policy. If too much money and interest has been siphoned off in there into something like a Bitcoin, and they can't, change the supply of it like they would money supply, and they can't, when it goes outside their realm of control, that's when they get worried, and that's when they'll probably, at some point take action in the other direction.
Let me interrupt for a second because we only have so much time on this segment, and I wanted to get to this question about gold and joining the bull markets that are surrounding it. What are your thoughts there?
Well, it's had a big correction the past couple of years. I think it's in the bottoming process, and I think it can start to rally here in the fourth quarter. I like to watch intraday how the futures markets behave compared to the mining companies. Mm-hmm. I found over the years that the miners will tend to lead the bullion.
Right.
Bullion and futures tend to be leveraged, and so your timing has to be much better. But if you feel that gold is going to go up, and you're not sure about the timing, you'll buy a Newmont, you'll buy an Agnico, you'll buy the GDXJ, you can buy a gold mutual fund, whatever it is, because you might get paid a dividend while you're waiting to be right. And the futures will turn, when there's an event to turn it or whatever. But the lead tends to go into the miners. You know it's going to go up at some point. You're not sure about the timing, so you'll buy the equities. And I've seen.
Well, let me get in there for a second.
The equities are performing better.
Let me interrupt you for a second, Bruce.
Sure.
We've got less than a minute left. Last time we had a rally, foreign currencies, if you're predicating your bullion in foreign currencies, you had a much better rally in foreign currencies than you did in the United States. All right. Do you think we're going to see that again, or the rally is going to be in the United States stronger than in foreign currencies?
I guess the easy answer is I don't know, and the market will tell me.
Right.
Okay. But I think we'll have a better rally in the States. I think the dollar index is ready to make a turn a little bit. All right. Here, it's had a very good correction in the past several months. And more people are. The sentiment is on the negative side. So I think the conditions are better for a dollar rally. And I don't think that's going to hurt the precious metals in here.
Right. Bruce, we're out of time, but thank you for taking the time of being a guest on our show. Appreciate it.
My pleasure.
Thank you. Bruce Kamich, technical analyst, TheStreet.com and RealMoney.com. This segment is brought to you by TheVitaminPatch.com. We'll be right back on the other side of this break with the Private Equity Spotlight and Ed Baxter of Bison Creek Capital.